why some traders consistently come out on top, while others keep losing, even though they're analyzing the same charts? The secret's simple. It's all about mastering high-probability setups and knowing the exact moments to enter and exit trades. That's what we're diving into today. We'll take a deep look at the smart money concept, break down the key factors for spotting high-probability setups, and just as importantly, how to avoid the risky trades that could damage your success rate. But that's not all. I'll also walk you through different entry and exit strategies, the pros and cons of each, and how to make better choices in the Forex market. We always appreciate your support, so be sure to give this video a thumbs up and subscribe to our channel if you're new here.
So what we can see when we're looking at the daily chart on pound US dollar, if I just scroll back just a little bit, we can see very clearly that we are in an uptrend. You can see that we are making higher highs and higher lows. We did have this nice drop here, but for several months, or basically from March onwards, we have been just steadily moving to the upside. And even if I navigate to the weekly chart, we can see this even clearer. We have this very strong prevailing uptrend. We've actually just broken a swing high and a previous swing high. So we've broken 2 points of key structure. There's a lot of liquidity resting above each of these points that have now been purged. And what we can see when we're looking at this bit of price action is that price has been efficient primarily all the way up. Any bits of inefficiency have been filled, except for maybe small bits here and there in more current price. And if we're looking at that from a logical perspective, we're seeing that price is continuing to move in an uptrend. It's only logical to trade with the overall order flow and not fight the trend. That's very clear that we can see. So when we're looking at that, and we can see that we do have inefficiency up here on the weekly chart. So we have reason for price to move back up here. We also have a weekly order block. And of course, the trade I took is not targeting these areas, but what I'm doing is building a case for the reason why price is going to continue long. Because we've taken liquidity, and we have areas that price needs to get back to at some stage to then create larger trade ideas, or at least based on the flow of orders that we're seeing, this is the logical next stopping point of where we'll see. So if we go back down to the daily chart, we can see we're in an uptrend. And what I can do now is I'll drop down to the 4-hour chart. And I like to map out zones on the 4-hour chart. And what we can see with the most recent bit of price action, if we're looking, we're caught between this range right here, the high, the low. And what we can see if we just draw that on is we're in a downtrend, but I said that I was looking for buys. Now, why would that be the case? Well, one of the key things to note when you're understanding order flow and you're trading this particular style is, although a trend change has occurred, that doesn't necessarily mean that we're going to be switching our bias completely to sells. We're not going to sell the farm hoping that price is going to drop way down here, take out these lows, or continue dropping down. Now, of course, we can look at trading this particular order block as we've broken structure, we've left imbalance, and what we can see is price is tapped in here and has caused quite the sell-off, which is nice to see. But what we also need to do is identify order blocks to really truly understand the order flow and where institutions have been able to mitigate their positions. Because in a lot of cases, when these order blocks come into play, yes, this is where institutions are placing the large orders, but more often than not, these institutions are also taking the opposite ends of their trades, which is why we get the concept of sell before you buy, where institutions sold here to push price down, convincing more people to sell so that they could buy, and then price then comes back down to those order blocks so that they can mitigate out of their position or break even on those positions. Institutions, especially large banks, don't need to use stop losses. They have so much capital, they don't care about drawdown. Why? Because these are the moves that they're looking for and they're positioned for them. So being able to hold drawdown is not a big deal for them. Now, with that logic, what we can do is just kind of navigate back and look at the chart. The best part to look at, especially the way this trade is framed up, is we can see that price has tapped into this area right here, and we've started to see a nice push off here. So what we need to do is ask ourselves, why did price react where it did? And this is the question that we need to be asking ourselves every time we look at a chart. Why did price do what it did? Well, what we can see is price has broken this high and also this high. So we've broken two key structural points here, basically in line with each other. So really one structural point if you want to get particular, depending. If you look at more of the structure here, we can see that we've created a high, we broke that high, broke that high. So we do have a couple substructures, but Without going into the complete nitty gritties of this move, we can all agree we've broken structure to the upside. We've left imbalance. And what do we know about moves that break structure, create imbalance, and continue the trend to the upside? We know that we're looking for an order block. So what we can do is look for the sell candle or the bearish candle before the move that rallies to the upside, breaks structure, leaves imbalance. So what we can do is we can denote this candle right here, and we have our bearish order block. Now we can take it a step further and we can actually refine our order block to the candle that really creates the momentum to the upside. And also what we can see, if I just zoom in ever so slightly, is we've left imbalance. And there's a very small amount of imbalance, but it's there nonetheless. And then one other thing we can look at when we're looking at this bit of price action and framing up and building the case for why longs make sense here is we have a set of equal lows. They're pretty obvious. They look good. You can see very clearly on the 4-hour chart. They're very prevalent. Support and resistance traders would buy this zone all day long. And what we can see is once we drop down, what did we do? We cleared out the liquidity, the sell side liquidity that rests from all the people buying here or the breakout traders that were looking to sell. And if I just move this over, what did we do? We tapped into this order block. So the sells that institutions would have gotten into in order to push price to get more sells into the markets to then create the move to the upside has now been mitigated, meaning that they've closed this trade for break even and have basically repositioned themselves to this area. So what I can do is I'll just draw on an arrow just to point out what this represents for me. And what I can now do is just delete that. And now that I've deleted off the rectangle, what this line or what this arrow is basically dictating in a little bit less busy manner on my chart, keeps a little bit cleaner, is that this order block has been mitigated. So from an order flow perspective, I can understand that prices come back down, it's tapped back into this, and that's drawn the move. We line that up with higher time frame structure moving to the upside, creating higher highs and higher lows. We can see that even if I just put on a couple more points just to explain the point a little bit further, we have an order block here, mitigates, moves to the upside, and basically the principle continues, and it also occurs on the lower time frame. But instead of having rectangles on my charts and really making things messy, this is a super clean way of doing it. I took this idea from Mr. Sketchy Wyckoff, who took it from the wizard Albert. So shout out to both of you because you're going to make my charts a lot cleaner. But anyway, so let's get back into it. So what we can see is price has mitigated this order block. We've seen a large push to the upside and a continued push. We're still caught within this bearish range, but what this tells us is although we are in a downtrend on the 4-hour, when we frame up the higher time frame and understand that we're in a bull trend, we've now reacted off of a 4-hour order block. We're basically creating bullish order flow, or really we're just creating more bullish order flow because we've been creating it this whole time. So what we can do is drop down to the 1-hour chart, and what my attention is brought to is basically this move here. We can see on the hourly chart, we had a high right here. This is broken structure. And even within the substructure, we can see that we've created a high, a higher low, and then now a higher high. So within this 4-hour downtrend, we're starting to create an uptrend. And what do we know when we see a move that breaks structure? We see an order block being created. Now, when we have such a massive move, and we're looking at whether we take an order block within this range, maybe right here, maybe at the origin, what do we do? Well, there's a couple different things that we can take note of. And one of the key things to really pay attention to, and it's something that the team has been working on for a few weeks now. We didn't want to really bring it to light until we had enough data to really bring it to fruition, is pay attention to how price is breaking structure initially. If price is breaking structure, showing commitment, breaking with full body candles, the likelihood of price returning back to the origin point increases dramatically. Whereas if price breaks with a wick, what we've noticed is that price is going to return to more of a decisional order block. So if there are, say, 3 order blocks within the range, it's going to go to one of them, maybe not necessarily the origin. It's a little bit less predictable in that case, but it gives us the opportunity to really understand, okay, we've gotten this strong break, commitment. We're going to put our sights on an hourly order block at the origin of this entire move. And when we look at this, obviously we're not going to use this down move candle. That's ridiculous. Doesn't make sense. And what we can do is we can take our sights on this candle right here. And the reason why I choose this candle Obviously, I took this trade, so I know my rationale for it, but I went down to the 30-minute. And what I did was I refined my hourly order block to this candle right here. This is a very clean looking candle, and that's ultimately what I've done to refine my hourly order block. Even if I go back up to the 4 hour, you can see that we just have this really large wick. And more often than not, when we look at wicks on a price chart, we can see that there's likely interesting things happening here. Even if we dug into this bit of price action, more than likely there was an order block here that tapped in. It built this liquidity right here, and then we actually mitigated here. This order block here, again, large wick. It's not a hard and fast rule, but it's definitely something to keep note of as you're navigating the charts as well. Wicks are important. They tell a story. They're not just telling a story of rejection like we've been told in all of our retail courses. So now that we've been able to refine our hourly order block, we can play price forward to what I was looking at earlier in this morning. We can see his price is about to tap into our order block. And what I did was I had a alert set basically at the distal point of the block. So this top portion of the order block, waiting for price to tap into it. Once it did, I moved down to the 5-minute chart. And basically what I was looking for, I wanted to take a confirmation entry on this setup. So when I'm looking at the structure on the 5 minutes, the logical thing to look for is a break of structure to the upside, and the most logical spot would be this swing high right here. And this was what I had identified and marked out as a potential break of structure that I was looking at to be broken in order to look for a long entry. Because at this point, there's no real reason to be entering a buy setup just yet. And anything besides that would likely be a rush in your trade. What I can also do is go down to the 1-minute chart and look at the substructure and begin to also break this trade down. And initially I was looking at the 1 minute, but ultimately I took the trade on the 5-minute structure. It gave me more indication. So what I can do is I'm actually just going to take price back to here really quickly and mark out a couple more points here on the 1-minute chart just to explain a little bit of the order flow components that I looked at on the 1-minute chart that gave me more confidence to take the 5-minute entry, which also could have been a 1-minute entry as well. It did present itself. And it ultimately comes down to what your plan is to suggest what time frame you're actually executing on. So what we can see is we're waiting for this high to be broken. We can see the price has come down. We've created a swing low. We've retraced back up. Not the greatest retrace, if I'm entirely honest. This is a much cleaner swing high, a little bit of a consolidation. But I was looking for a little bit of an aggressive start to the overall trade. But one thing to note is, regardless if we pick this point, we'll see that either work for the trade that I actually took.
I just want you to know that I also share trading signals to community for free in the Telegram channel. For example, yesterday, I share the gold signals to community. You see all 3 TP getting profit yesterday, and the whole community getting profit by this trade. You can see every day I share trading signals to community and most of them get profit. And especially, I do not only share the trading signals, but I also share the markup and the reason why I entered the trade. And by this one, everyone in the community can understand the reason, and by that, everybody can improve their trading skill. And to join community for free, you can click on the description of this video and click this link here, and you will be directed to the community and join for free.
So we can see if we just play price forward, we can see that we've broken structure to the upside. What we can see is, like I said, this high is not the most convincing. Now what we could do is look for or set an order on this particular order block right here and take that, stop just below, and basically targeting structure as your first target. And what we can see is that price basically taps into it and begins to explode to the upside. We can see that we've broken structure here and we've broken structure here. Now, like I said, that this high was not the cleanest for me personally. And also when I look at price breaking structure here, we broke structure, we retraced, we consolidated and kind of just hung around. We broke structure one more time. We seen a little bit stronger selling pressure and came back down in, which is ultimately what tapped into this block. So what we can gain from that and what we can say is that price very early on had a mitigation. And what we can see is that there was an order block created here. It did facilitate all of the key functionality that we look for order blocks. We had imbalance created. We could say that there are a grouping of equal lows here, although you might be reaching if you're saying that, but depending on how you interpret equal lows, this is equal lows of candle bodies. And what we can see is price is creating higher highs. So we're continuing, we've tapped back in and begin to push to the upside. Now it's when price breaks this bit of structure, you start to get a little bit more of an inclination that volume is entering the market. So what we can do is we can then look at this sell candle before the buy that breaks structure, creates imbalance, and takes out liquidity. And what we can do is we can refine it if we'd like to this candle right here. And again, we can look for an entry right here. And if I'm looking at a stop loss, what I would do in this circumstance is, because we have this wick, this swing low, which our initial order block or unrefined order block would end right here, it's best to put your stop just below that. Give the trade a little bit of room to breathe. A 4.5 pip stop loss is unbelievable compared to most strategies out there. So it's not very big, even if we're targeting the highs. I don't want to get into risk to reward quite yet, but a 7-hour trade on the cards, great. So what we can see is we'll just keep playing price forward. Price taps in, it would tag this entry in. You can see we get a little bit of drawdown, some stress, and then we get momentum. This is where I looked at the charts and went, oh no, I missed the trade. I was making coffee. Coffee's important, so I let it slide. But looking at this, seeing the order flow, and then also looking at something else, we've broken this clear swing high on the 1-minute chart. Not so great swing high, not really great looking breaks of structure, price is struggling. Clear swing high, clear momentum, great. So now what we have is we have better looking breaks of structure. We have a little bit clearer order flow that we're starting to see. We're seeing a series of mitigations at this point. So what we can do is we can look at an order block here. Now this one is a little bit of a between the lines sort of order block drawing concept, if you will, just because of how messy this is. And this is essentially why I look to trade this on the 5 minutes. So if we look, we have a sell candle before the move that breaks structure, which we could use that. You could refine to this candle or refine to this candle. There really is no right or wrong answer in this case, because let's face it, this is large. This created the momentum, but what we can see is we broke structure, created a wick, we've retraced down. So what I did was initially I was keeping my sights on this candle here. It just cut down the range a little bit, and I factored in these lows as well, just to give the order block a little bit of room to breathe. But of course, when I came back to the charts, we were about right here in price action. And the first thing that I noticed when I came back to my screens with my cup of coffee in hand was that we had liquidity right here. We had some equal lows, and we're seeing price push back to the upside. So now this order block is looking even better as we have these small collection of equal lows. We'll play price forward a little bit more. And what we can see, if I just mark on a couple more breaks of structure, again, this is the more lower quality structure. This is the better structure, but it leads to the same results at the end of the day. And if we're looking at a little bit of extra bits of information, we can say, hey, Brad, you said that if price breaks with a full body, we're going to go to the origin. We didn't go to the origin. We went to a decisional order block. Yes, that's true. But one thing I also did say is if price struggles to continue after breaking structure, the likelihood of returning to a decisional order block has increased. And what can we see here? We've reacted off of this decisional order block, not the origin order block. Now, if we keep navigating price, we can see that price breaks structure, fails to continue. This is our mitigation that we get. Price then breaks structure with a wick and then continues. Is there a decisional order block within this range? No, it's just the origin. So in this case, no big deal. That's what happened. Here, full body break. And this is also why here, full body break, origin of the move, full body break, origin of the move. So that's why I'm looking at that. Now we're building liquidity above this order block. So we're just adding to our case for entry. Again, the whole reason why we looked at this trade to begin with was the higher time frame was in a bullish trend, and we've tapped into a higher time frame, 1 hour order block, and we're seeing bullish order flow as price continues moving to the upside. So we just keep playing price forward just a little bit more. What we can see, if I move back up to the 5-minute chart, we've now broken structure on the 5 minutes. We've broken it with a wick, but if we look at this chart, is there a potential decisional order block that we can look at? No, not really. Sure, this wick is a little nice. Sure, this wick's a little off-putting, and we have this weird candle, this inside bar, but ultimately, the cleanest and best looking entry is on this 5-minute order block right here. So this looks like a great entry because we've been able to factor in the lower time frame order flow. We're understanding that we've seen a series of mitigations to validate and vet this order block versus the origin. We've also broken with a wick, so we're looking for more of a decisional order block on the 5-minute rather than an origin. So now that we have that, we can continue playing price forward and effectively just waiting for this order block to get tapped into. We'll go back down to the 1 minute just to look at price action and really just dig into the details a little bit further. But again, like I said, the reason I took this trade was on the 5-minute. That's how I framed up the overall setup and put in my entry, which was at 132. Put that in. I used a 6 pip stop loss, which was just below. So my entry was at 132.735 and my stop loss was 6 pips. And basically for this trade, before we move into anything further, let's take a look at the structure to get an idea of where price is likely going to react to, what looks like we could see some sensitivity, and really just frame out a solid trade, whether it's an intraday, which was the idea of this trade, was to be in and out as quickly as I can using this higher time frame bias, because I know price doesn't have to just continue rocketing to the upside. It's going to consolidate it. It's going to do all sorts of things. So what I can see right off the bat, we've broken structure, broken it impulsively. We've continued to push away from it. We've created imbalance. We have some imbalance to be filled here. So what we can do is we can take a look at this bullish candle. That is the origin of the move that has broken the structure, created that imbalance, and we can refine our order block to this bearish candle here, as we can see that this is when the momentum really came into the market in comparison, and we have this imbalance right here. So this is a great spot to be looking for a potential slowdown and basically taking profit, or at least managing the trade a little bit more aggressively. And if we go down to the 1 minute, we can see quite clearly on the 1 minute, we have a very clear looking, refined 15-minute order block. We have this sell candle before the large move that has broken structure, lots of imbalance, and price has moved heavily to the downside. And if we just move to the left, we can see that we have not only the local break of structure right here, we've broken this point of structure, this point of structure, this point of structure, and these points of structure. Now, when we're looking at structure breaks, the more structure breaks you get in succession, the stronger the move's going to be and the increased chance that this order block is going to be respected. So now that we know that we're seeing this higher time frame order block, we have our targets set, we have our entry set. Let's play price. We have a high probability trade here. We see the order flow. We're trading with the higher time frame direction. We have equal lows. Let's continue price. Let's keep playing price forward. And what we can see right here is we've now created even more equal lows at that level. So we can see equal lows forming. So we can take the theory and the concept of liquidity being generated here and just expand it even more here. We're just really drawing on more liquidity that is being created above the order block that we're looking to enter at. So that just improves the quality of the order block that we're looking at. And we can see price gets a nice push away. And if we're just looking at this on a 1 minute time frame, we can see that we had our swing high here. It broke with a wick. We have a decisional order block right here, as the origin would be the move that we're looking at as well. Now, I was looking at this, but because we had the equal lows, I decided to filter out this order block and focus my attention on this order block. Now we can see his price reacted off of it very nicely. We got a very solid reaction. Could have traded that, but as we can see, if we just continue playing price forward, the 5 minute time frame is taking over. And what we can see is price taps into the order block, met with a little bit of drawdown here. Price was really consolidating. We didn't really see that strong reaction because ideally what we want to see when price taps into these order blocks are very strong reactions, basically a tap and go. We didn't really get that, so it was a little bit concerning at first as we were loading up. But then when you start looking at the time, this was about 9:15 Eastern Standard Time, which is basically gearing up for the New York Stock Exchange Open. And what we can see is if we just continue to play price forward, we can see that price then begins to rocket to the upside. And if I clear this out, we can just then mark out a few more of these mitigations just to visualize it and clean up the charts a little bit. So we can see that we've mitigated this area. And what we can also see is price created this move that came down. It broke structure on the 1 minute. We have structure here. So what we can actually also note is we do have an order block here that was mitigated, and that's what brought us to our entry. So when we're looking at price to come back to here, we have a little bit less resistance, but that's not to say that there aren't orders potentially resting above these areas. We can very clearly see that we have equal highs, relatively equal highs. These are more of a swing high and then a lower high here before we came and pushed, but needless to say, that also adds to our target that we're looking at. And what we can see is price is starting to more or less squeeze at this top, which is basically in a price action form, more shorts entering the markets at these highs. You can see that we have, even if I just go back a little bit more, we have more equal highs and we have this lower high. So we got basically a triple top, so more reason to look for sells. We get a reaction just to get people on the wrong side, and then price begins to push to the upside. It was at this point that I partialed out some of my position to secure some profits, and my trade was at break even. I was actually at break even once we broke this swing high here. After this move here, I moved my stop loss. Let's just draw that on just below these lows here. And one of the main reasons why I also factored in this area is if I look at structure a little bit cleaner on the 5 minute, what we can see is our swing high was here. We broke it with a wick. We returned to the order block, which is what we've entered on. And then what we can see when we're looking at the 5 minute is that we broke this high with a wick. We returned to the origin of the move because there was no decisional order block. And when we look at this swing high, we can see that we've broken with a wick. Yes, we've continued, but I was looking at it as a potential decisional order block play.
I just want you to know that I also share trading signals to community for free in the Telegram channel. For example, yesterday, I share the gold signals to community. You see all free TP getting profit yesterday, and the whole community getting profit by this trade. You can see every day I share trading signals to community, and most of them get profit. And especially, I do not only share the trading signals, but I also share the markup and the reason why I enter the trade. And by this one, everyone in the community can understand the reason, and by that, everybody can improve their trading skill. And to join community for free, you can click on the description of this video and click this link here, and you will be directed to the community and join for free.
Move back down. So looking at that, I figured my stop loss was in a good spot. If price taps in, it gave enough room for the decisional order block to play out and continue moving to the upside. And what we can see if we just continue pushing price forward was that price did not respect the decisional order block. And if I just, again, navigate back up to the 5 minute chart, what we can see is price, yes, it did break with a wick, but it also continued very nicely. You can see that there's a fair amount of momentum in that before we got the true pullback. So when we're looking at that, we can go back down to the 1 minute and basically look at the structure. And we can see that the 1 minute does break with a wick as well. And we just get this kind of consolidation, move back down, move back up. So which is why I was looking at the decisional order block. But what we can see, if I just go up one more time frame, on the 15 minutes, although it hasn't broken 15-minute structure, we have this large momentum candle that has broken, just barely broken substructure within this overall 15-minute range. We have that sell before the move that creates imbalance, and we have this candle So if looking at that, we could see that that would be a good opportunity for price to return back to before it moves back to the upside. And what we can see, if I just continue playing price, it does get a little bit of a reaction, and then price then begins to move back to the downside. And we can bring it basically to current price. If I just turn that off now. And what we can see is price has been playing around in the range. If I just move back, we can just see we basically drawn liquidity. We've swept that liquidity now. Equal lows once more. And we're just consolidating in a sideways range at this point. And one of the things that we were noticing on the lower time frame charts, the 1 minute charts, is that the series of mitigations from a bearish order flow perspective were starting to take over. We were seeing lower highs being printed. We've seen a bearish order block being created, it being mitigated, and price continuing to the downside, beginning to show that the bullish order blocks at these price levels are not holding as strongly as they should. Now, if we factor in the fact that the most recent bit of price action has been in a downtrend as we've reacted off of another higher time frame point of interest, we can then frame up that the likelihood of price continuing to the downside is going to increase, but we need to focus on the price action, the order flow, to really understand where the money's being moved and to follow the institutional footprints that we're seeing. But that was the rationale for the trade that was taken on pound US dollar. The rationale for the trades on the higher time frame, trading with the trend, trading with higher time frame points of interest, refining those points of interest down, and then using all of the time frames to paint the picture, to tell the story as to what is happening. Now, we don't have to directly trade the 1 minute chart. We can just look at it for informational purposes, to look at very small granular details of price action, just looking at price mitigating so we can start to understand where price is likely to go, using breaks of structure and understanding how a difference in a break of structure can mean where price is going to go. Now, of course, like I said, in this case, price broke structure. It returned to this order block. This was the decisional. This would have been the origin. We can see that price did eventually return to the origin, and it's not saying that it won't return to the origin, but if we're looking at recent price action, a break with a wick with no commitment, we return to a decisional order block, create another leg. We can even see that once we broke that, we still broke it with a wick, broke this with a wick. We returned. We've seen sensitivity to the decisional, but it did tap into more of the lower range. But if we look at the origin, we can see that we did actually tap into it. We got the move to the upside, and we just continued to move sideways. So I hope that was helpful in explaining my rationale, my thought process on how I executed this trade this morning. This was a trade that I've been following for quite a while, pretty much once price broke this high. So basically it was a day long of waiting for price to patiently come back. And one other final point that I wanted to raise is I thought I missed the trade here, and what basically came down to, I got in around the same spot, and all it required me to do was be patient. I could have very easily looked to trade this order block, may have gotten a break even, and then price moved back down. Likely would have confused me in terms of what do I do next. Whereas using this slight refinement of understanding these breaks of structure and what they are likely going to do to order blocks in terms of where price is going to react to. Now, I strongly suggest and encourage you to back test this approach and understand how breaks of structure factor in. Now, of course, when we're talking about breaks of structure, we have the 3 different types that you can use. Many of the community, including myself, use type 2 mapping. But with that said, now that we're looking at how price is breaking, if we are breaking with a wick, yes, that is not a break of structure, but it gives us a clue of where price is going to return to. And if we know we're looking for a long and we're factoring that in and we're having that break of structure, we can use that to our advantage to position ourselves, or at least understand where price is going to mitigate and then create another break of structure that will then allow us to look for an entry. We don't necessarily have to get in on the very first mitigation or the second one. We can get in on the third or further, depending on how price is going to respect these areas. Now, this isn't the perfect scenario. This isn't the best trade. This is just a trade that I took this morning. I thought it had a lot of relevance and lessons that I could make a video for and just explain how I look at order flow, how I understand mitigations, how that represents to the trades that I am looking to take, and just showing that you don't need to worry about missing trades, because if we're patient and we understand order flow, liquidity, things like that, we can understand and see that price is going to return to these areas anyway. And in this case, patience did pay off. I was able to take some profit on here and ultimately got closed for break even at this point. I did consider re-entering here, but at that stage, it was more of a case of this might be greed taking over, or my need to feel like I need to be right, and then justifying a 15-minute order block that hasn't actually broken structure or anything like that. When you find yourself doing that, you're too caught up on the lower time frame. You need to take a step back and look at the bigger picture and go, does this actually make sense? And when we start to look at this bit of price action, this was a great trade for about a candle and a half, and then we've just traded sideways, which is to be expected. We're now at 2 o'clock in the afternoon, Eastern Standard Time, almost 3 o'clock. What ends up happening after about noon, the markets tend to slow down, and we can see that quite clearly about noon. We did get some sell-offs. We tapped into an order block here, and we haven't gone anywhere. We've just been consolidating, and we'll probably continue to consolidate until after the Asian session, once London markets are set to open again. But again, I hope this was insightful. If you have any questions, feel free to reach out. I'm going to continue to speak more to this mitigation process, understanding the order flow. And the one thing that I just want to stress one last time is that I did not simply look at the 1 minute chart or the lower time frame charts to frame up this trade. My trade started on the weekly chart, understanding the order flow, the way the markets are moving. I moved down to the daily chart, looked at how we've been trending. That gave me a clue. I looked at the 4-hour chart, noticed that we were still in an uptrend. Nothing has changed, obviously, from looking from the weekly to the daily. Not much is going to change. You don't need to check it every 2 seconds, but it is a good reminder to be looking at where is price heading, because at the end of the day, price can't just turn on a dime when we're looking at a weekly or a daily chart. When we look at the 4-hour chart, we can start to see a series of mitigations. Although we're in a downtrend right now, we can see that this order block has been respected, and we have seen a push higher up, and on the 1-hour chart, we have broken structure. We've been able to break structure. You'll find this order block on the 30-minute, but even if I were to use this candle right here, what we can see is, yes, it did spike through the zone, but if I navigate down to the 1 minute chart, we're still well within the zone. It's a little bit messy, and I will agree 100% with anyone who is probably thinking about that to themselves as they watch this part, that we broke the zone, but then we've pushed back up very aggressively, and then that's when the structure broke. This zone becomes a little bit less important. It's still important because that's what we're framing our trade up on, but now we're in entry mode. We're trying to find a reason for entry, and that's when we start looking at market structure. We start looking at the order flow. Where's the money being moved? It started here. We had this break of structure. The money moved here. We mitigated, broke structure. The money moved here. Price broke up. Basically manufactured liquidity so it could come back down and push the market up even higher to tap into this order block, which is what we've seen structure play into. And what we can see is we've basically now mitigated into another order block here and pushed to the downside. So what we're seeing is, although we are creating bullish market structure here, we're also creating bearish mitigations as well. So it's kind of telling two different stories as we look at price action. It shows that there are a few different things happening, and whether this is profit taking down here, we don't know. We'll never really know for certain until price actually does what it needs to do. But what we need to do is position ourselves in the best possible way we can. And how do we do that? The way we do that is we build a case for entry. We understand the narrative. We don't just take every trade because it's a trade setup, it ticks off some of the criteria of my trading plan. No, we need to really become analysts. We need to become professionals. We need to understand why the market's doing what it's doing, why it's likely to go where it's going to go, and build a case around that. When you're first starting out with this strategy, the biggest thing you can do is dig into the charts and ask yourself, why did price go here? Why did price go here? Why did price react here? Why did price do this? Why did price do that? And dig into the details. Initially, you probably won't be able to figure out everything, and in some cases, the market may not have a logical explanation because we have so many time frames at our disposal, and every time frame has their own relevance and will take over when it needs to. But that is the most important thing, is asking the question why and continuously trying to figure that out. You'll gain so much more knowledge when you jump into case studies with that approach. And when you're framing up trades with the higher time frame, you're giving yourself the proper context to then look for your entries on the lower time frame. If you're just looking for entries on the lower time frame with no higher time frame confluence, you're really not setting yourself up for success. You're going to struggle. I guarantee that, because I myself, when I jumped into the lower time frames, incurred so many losses, took so many stupid trades. Why did I do that? Because I just got lost in the noise. You start looking at breaks of structure, you go, oh, that's a great looking order block. You start looking for sells that maybe don't make sense, when all you needed to do was take a step back, go, okay, we reacted off of a 4-hour order block. Now we're reacting off of a 1-hour order block, which is basically the confirmation entry of this 4-hour order block. And now we're using a confirmation entry on the 1 minute to take an entry here. We've built that case for entry from the weekly all the way down to the 1 minute. If you don't trade the 1 minute, that's fine. You don't have to. Again, I took this trade on the 5 minute, but the 1 minute explained things a little bit clearer. It gave me a little bit more price action to dig into and just explain. It gave a little bit more reasoning and understanding of the mitigations that were happening that led to wanting to take this particular trade here. So I think that's just about it in terms of this trade, the concepts that I use to filter order blocks a little bit more. The key things for filtering order blocks is understanding liquidity, understanding mitigations that have happened or are happening, looking at how do we break structure? Do we break it with a wick? Do we break it with a full body? Do we commit when we break, or do we immediately break and retrace, or show a less of a willingness to continue pushing in that direction? Now, there would have been nothing wrong with taking this first or second trade, but what you'll begin to notice over a larger set of data is that this is more than likely going to throw you off taking the entry here. You're going to probably get more losses than you do wins, but if you're an aggressive trader, you can bank some pretty solid risk to reward trading this way, but you have to be aggressive, and you also have to know when to call the trade. And I think that's one of the key things of trading lower time frames, is knowing when to get out of trades when it makes sense. You can't just take a trade on the 1 minute and go, okay, we're going to trade to this daily high. Now you have a nice 44-hour trade on the cards. Price may get there, but more than likely it's not going to get there on that 1 minute time frame. It's going to consolidate, it's going to accumulate, it's going to retrace before it makes its way up there, if it's going to go up that far. We have a lot of reasons to look for buys, so the rationale is there, but trying to take a 1 minute entry and aim for the moon is probably not going to happen in most cases. Not saying that it won't, but it takes a lot of time, effort, and precision to get to that level, to understand where the 1 minute entries are and how you can translate that to the higher time frame. And it's all about building that narrative, putting yourself in the best position to win these trades. And that comes from the higher time frame, comes from actually understanding and looking into all of the little details of the small mitigations. Maybe you wouldn't take these, maybe you don't consider them. That's fine. But it's also the awareness of what is price doing that creates the bigger picture of the trade that I'm actually taking. So all these little nuances. How does price break structure? I know we haven't mentioned that in the content. Again, it's something that we have been working on for quite a while, just to really flesh out before we just launch it to the community. We don't want to just tell you about bells and whistles and, hope that it's going to work for you guys. We want to put the work in and make sure that what we're telling you is something that actually has data to support it. But again, even with that, there's always the asterisk that you also need to back test it, see if it works for you. Maybe you find something else different. We're all going to interpret the charts a little bit differently, but this is just a tool that we can also use to give us a little bit more insight on where price is likely to mitigate before it continues back to the upside. So I hope this was insightful, and I hope this will help guide you into filtering your trades better and keeping yourself focused on the bigger picture and being able to use those bigger picture ideas to execute on the lower time frames. But always, always, always the emphasis is on the higher time frame, where we've come from and then the entry comes. Because we're really only spending time on the lower time frames when we're looking for entries. Besides that, we should be on the hourly chart, the 4-hour chart, really getting an idea of what price is doing. Because when it's caught in a range, there's not much happening. You're going to get caught in so many trades, you're going to get caught with your pants down. And you don't want that. You don't need to take 100 trades a week. You can take 2 or 3, and if you bank the right trades, which will, if you're focusing on these high probability setups with all the confluences in your favor, you're only going to need 1 or 2 trades per week in order to really see the positive impact that it's going to have on your P&L.
I just want you to know that I also share trading signals to community for free in the Telegram channel. For example, yesterday, I share the gold signals to community. You see all 3TP getting profit yesterday, and the whole community getting profit by this trade. You can see every day I share trading signals to community and most of them get profit. And especially, I do not only share the trading signals, but I also share the markup and the reason why I entered the trade. And by this one, everyone in the community can understand the reason, and by that, everybody can improve their trading skill. And to join community for free, you can click on the description of this video and click this link here. And you will be directed to the community and join for free.